anyone new? I think JK is our regular. So we in the past also we had talked about. Let me share my screen. In the past also, this is a Bitcoin Treasuries podcast. In the past also, we discussed about STRK. Today's session will also focus on STRK itself, right? So we'll start with this. We'll start the session with a YouTube podcast of Bitcoin Treasuries, wherein strategy CEO Fong Lei is having a discussion. So yeah, as you might be knowing, Michael Saylor is now chairman, and Fong Lei is the strategy CEO. Yeah, so let me start the video. Let me mute myself first. Feel free to ask any questions anywhere. You don't have to wait for the presentation to be over, for the videos to be over.
Could it ever make sense? Like, for example, if the MNAV falls below 1, would buying the shares back be the better buy?
There could be an argument that if the BTC
Yeah, let me replay it from the right place. Give me 1 second.
This was on the strategy handle last night. STRK serves a market 2.6x larger than MSTR. First of all, can you expand upon that? And then also, there's this point of view that said STRK was not as successful as initially thought, but obviously, in light of the $21 billion ATM offering announcement, like, is that true? Like, you want to unpack any of the strike conversation?
So I wrote that, right? So there are reasons, and I think the oil refining analogy that Mike walked through, I think in October in our earnings call, was a pretty good one. There are different pools of capital and different investment reasons, right? There are fixed income investors out there who, think of somebody who's, call it 70 years old, they've retired, they have $2 million in their bank, and all they really want of that $2 million for the next 20 to 30 years of their life is to return 10% fixed yield and get 200K and live off of that 200K. I would argue that individual is not interested in MSTR. They're certainly not interested in MSTU. They're not interested in Bitcoin. They just want to make $200,000 a year off of that $2 million. And to date, the way they would do that is likely some concoction that somebody provides to you via their wealth management fund that takes, 100 basis points off of that, right? And they're going to give you that 10% dividend and nothing else, right? And you're paying a pretty fat fee for that, right? Maybe, you could invest in corporate treasuries, right? But that those are getting you more like 5 or 6%, right? And you're leaving some money on the table, right? That is the global bond market as it exists today. And I'm talking about it for retail. Obviously, that global bond market is very interesting to fixed income investors, insurance companies being a good example, where they want to have a fairly low risk, high return, high yield option. And that global bond market is about $300 trillion, right? Versus the global equity market, which is about $120 trillion. So the whole idea behind strategy launching Strike is to access that global market, the fixed income market. Folks who want a fixed return versus a short term, I'm going to buy strategy, I'm going to buy Bitcoin, I'm going to see ups and downs, right? Now, I would argue if you really want to maximize, right, and you have a long 40, 50-year horizon, you put it in Bitcoin, you just sit and you watch it accrete, right? But there are people who just need income off of their investment, right? And so the size of that market, folks who invest in bonds versus folks who invest in equities, is 2.6x times. So why did we launch Strike? We're going after that market, right? And we'll launch other things. We're going to continue to look and survey the market and see what else we can do. But there are different folks who want some sort of a fixed income outcome, right? I would like it too, right? Like you might want to, like, you may say, I'm going to put 90% of my net worth into Bitcoin and I want to just sit back and watch it. But you actually have to pay the bill somehow. You have to buy your orange tie, you have to get your crew, you have to do all these things, right? Like, and so having some income is a good thing. That's what Strike does. It gives you an 8% perpetual fixed income. It's a preferred offering. And it also gives you some equity upside, right? Downside protection. So we expect it to be less volatile. So then what is the success of Strike? I think it's interesting that folks are saying it's not successful. First of all, Strike was one, back to the innovation, a perpetual, meaning it goes on forever, preferred convertible bond. There's been like one issued in the last 20 years, right? So, and you can imagine when we're sitting, and based on Bitcoin, right, zero, right? We're the first company that's ever done this. And you can imagine we're working with the smartest bankers in the world, working with the smartest attorneys in the world. And of course, when you go to them and say, hey, this is what they want to do, they say, you can't do this, right?
Of course.
And you can imagine what happens when they say they can't do this to Mike and I. That's like, I'm just getting started, right? Like that was like the challenge, right? Challenge accepted. We're going to do this. And generally speaking, when people get uncomfortable and you are able to do something that others haven't done before, that's innovation, right? That's 0 to 1 innovation, I think, has been coined by Peter Thiel, right? Like that's when we're creating something not on top of something that someone else has created, but something no one else has ever done before. And so Strike was super innovative, right? And it is the top performing preferred bond in the world in the last decade, if you measure it by increase in value, or you measure it by volume / liquidity, right? So I think it's been very successful. We've just put out a $21 billion ATM on it. We're just starting to test the ATM out, right? Because what else has never been done before? An ATM on a perpetual preferred convertible bond, right? Fairly unprecedented. And so we're doing that now. And when you do it, you just have to, we're in the market sort of every single day testing and seeing what we're able to do in terms of liquidity and issuing more of this. And that's fun, right? Like, and when you get the end of the day, we're like, we issued this much via the ATM, you get the report from the bankers, you talk to the treasury team, et cetera. And that's just like, that's pure invention and innovation. And it's so much fun. How will we measure success? How much of this, what is the market demand for this? How much of it are we able to issue, right? What happens to the price? So understanding, as the price goes up and we issue more, it might drive the price down a little bit, right? What's the volatility, right? How is it correlated or not, right? We also have shown on our strategy.com website, and we share this information, via X also, that generally speaking, it's uncorrelated to MSTR. It's uncorrelated to BTC. So if you're sitting here and saying to yourself, I want an 8% yield on an instrument that may appreciate in value, that gives you a convertible option to strategy and is uncorrelated to strategy, to MicroStrategy, MSTR, and Bitcoin, we've created it. We invented it. We've created the instrument for you, right? And so I think as people wake up and realize what this instrument provides, like an 8% yield's a fat yield, right? Like that is great. And as it prices down below par, the yield stays fixed, right, at 8%. So the dividend stays fixed at 8%, right? The yield actually increases, right? Increases to 10% and higher. So you're actually getting a really fat payout every single quarter, primarily in cash. Now, I wanted to invest in this, right? Like for reasons that we weren't able to. The Section 15 officers weren't able to invest in it, but it's a great investment. Like I would buy more of this, right? Like, and so it's a great thing to have in your portfolio. And literally, you're getting a check every quarter, like a dividend paying instrument, like if you would buy a dividend paying stock. But this is a preferred, right? So the downside is much less.
Yeah, I've actually heard one individual describe it to me as if they have cash or they have savings, they're just parking it in Strike.
Yeah.
That's like their savings account.
Yeah,
I'm
like
that's an interesting way to think about
why would you invest in a money market that pays now 4.5%, or a CD that you're tying something up for a year or 6 months and you're getting 6-7% when you can get an 8% guaranteed yield on a perfectly liquid instrument?
with the markets being the markets and needing to be accretive with this entire strategy, there's a point of view that the ATM of shares in the fall was like too fast. Do you think that pace was too fast? Do you think it was correct? And then would that at all inform the pace, that pace of the common shares? Would that inform anything that we might see with the STRK Preferred Shares?
I think we go back to the KPIs, right? If you look at BTC yield, as long as you're adding Bitcoin, that's accretive to our shareholders in terms of BTC yield, right? There's a lot of conversations around dilution, and it depends on what your definition of dilution to shareholders is. Obviously, your definition of dilution is any incremental shares issued, then that would be seen as dilutive. If your definition of dilution is, are you decreasing BTC yield or increasing BTC yield? We saw that we added 200,000 Bitcoin. We increased BTC yield by 60-70%, and we added last year $14 billion of BTC gain to the company. Do you believe in those KPIs? Like, we're not making these KPIs up out of the ether. We're looking at the business. We're talking to our shareholders. We're talking to our debt holders. We talk about these KPIs, and they all sort of nod and say, yeah, this is how we look at your business. And so if you believe in these KPIs, BTC yield, BTC gain, and as you know, we're as transparent about them as I think we can possibly be, right? In fact, when you think about issuing equity, I fully understand the perspective that if you issue equity via an ATM and the return on that equity, right, is going to be 11% on an investment to increase your income, right, that happens in 1 to 2 years, there should be skepticism. Where there should really be skepticism is if you're issuing equity to do an M&A transaction that has a theoretical 7% return and it takes 3 years to see. We're literally issuing equity. We're turning around and in some cases buying Bitcoin that exact same day, that exact same hour. And we are showing you what the BTC yield is the following Monday. But know that we're internally asking ourselves, how do we create that BTC yield minutes after we issue the equity? Right? Literally, we're going out and trying to buy Bitcoin. We're trying to be, we don't want to be long the dollar. We want to be long Bitcoin. And so it's a completely different thought process of issuing equity and waiting for 3 years to see if you get a return versus issuing equity internally, us knowing within an hour and our shareholders knowing no more than 7 days later, right? Really 5 days, 6 days later, right? So it's hard to apply traditional financial analysis of dilution when you're dealing with Bitcoin.
Could it make sense to buy your own shares back? Could it ever make sense, like, for example, if the MNAV falls below 1, would buying the shares back be the better buy?
There could be an argument that if the BTC yield is positive, buying shares back, right? And in that particular case with negative MNAV. But then the question is, how do you buy those shares back? Would we sell Bitcoin to do it? No. Would we issue debt to do it? Maybe, right? And then you go back into the conversation of, well, if I'm able to issue debt, right? Should I issue, if I issue the debt? Then the question is, once you've issued that debt, what is more accretive, buying back shares or buying Bitcoin? And you'd have to do the math and the calculation off of that, right? In 2022, during Bitcoin winter, we did. We issued debt, we issued equity, and we bought more Bitcoin with it, right? And there were conversations that we looked at internally then of, are we better off buying back shares? And we definitely, that was on the table, right? And so there could be a place where we would do that, but we wouldn't sell Bitcoin to do it. We would issue equity or share or debt to do that.
how many people here currently work on the Bitcoin strategy versus everything else? I've heard it's 5 people, it's 12 people, it's 8 people. How many people is it?
Total, someone in our finance and accounting department actually looks at this every single quarter. The number is somewhere in the 10 people range.
Okay.
Right. And, that's the core, I'll call it Bitcoin finance strategy. We have the rebranding and we have the website and we have other things like that, which obviously add to the value of the organization and the Bitcoin organization. And then you might say there's another 10 or 15 people that do that. But from time to time, we tap on people to help with other things. One thing that we did last year in August of 2024 is we ran the two things fairly separately. We said you're a software person or you're a Bitcoin person, right? And of course, myself and some other folks, in our finance department, Andrew King, there's some intersections there where we're a little bit of both. But we said it's time. We need to, and it was one of, we said it's time to spread Bitcoin with love. I think it was Mike's 21st of his 21 rules of Bitcoin is to spread Bitcoin with love. And we said it's time. And so we actually now have created training for everybody in the company. You have to do it. In Q3 of last year, it was Bitcoin 101 or Bitcoin 100. In Q2 of last year is Bitcoin 101. We made people watch podcasts. You can imagine, watch videos, listen to podcasts. We made everyone read the Bitcoin standard. And I say everyone enjoyed it. It was a lot of fun, right? Like now we're doing Bitcoin 104, or Bitcoin 103, which is focused on Bitcoin finance for corporations.
Okay.
But you had to get through 100, 101, 102 before you could really do 103. And everyone is doing it. We did we're going to have a Bitcoin debate, right? Like that's going to be live on the 7th floor. And we're doing all this fun stuff in the company to really start to spread Bitcoin with love across the organization. But core day to day, it's about 10 people who work on the strategy.
Strategy announced a Bitcoin advocacy role. Like, how do you measure success for Bitcoin advocacy? What all are you endeavoring to do?
So this is something that is also new, right? I'm a big believer in focus, and our focus was buying Bitcoin and coming up with and inventing creative capital markets transactions and strategies to buy Bitcoin. And for 4 years, we did not. We were very careful not to away from that, right? And since then, especially as we saw what happened at Bitcoin Nashville here, right? Really becoming now more than just Bitcoiners and Bitcoin treasury companies, but expanding to investors and also expanding nation states. And actually, us seeing things like MSTR True North, like yourself, like folks who are really now looking at strategy not just as a way to invest in.
Yeah.
Hey,
I think you have covered the STRK part, so you can stop that video. I'm really sorry, guys. I am actually outside. So.
No worries. Yeah, take it away.
Yeah. So you started from the second link, right?
Yes. So when we started, it was talking about the market size for STRK.
2.6 times. Yeah. Right. Okay. So, right, guys. So what STRK achieves, like STRK basically helps bond investors to get Bitcoin exposure. So, the market which convertible bonds were catering to, STRK caters much larger market than a convertible bond market. So yeah, I think you all have got an idea about that. So I will share my screen.
I had one question, which was around. So they talked about the dilution. So like there will come a point when if they're issuing so many stocks, the stock will get diluted. Like, does that affect anything about the conversion, about the dividend that people are getting on preferred stocks? And the second question was like 8% is not fixed, right? Like the moment
Yeah.
the stock price sort of starts going up, the return sort of starts coming down, and will it still be as attractive as it is right now? Yeah, these two questions.
Yeah, so basically dilution will happen, but I mean STRK will be the most accretive way for I mean strategy and strategy shareholders to achieve a great a great Bitcoin yield better than converts and doing direct equity MSTR ATM. So yeah, dilution will happen, but dilution will be less when you compare it to converts and MSTR. So because currently the strike price, which is as of now decided according to the liquidation preference value, is I mean the conversion ratio is 10:1 and liquidation preference value is 100. So currently we have $1,000 like strike price. $1,000 is current strike price. So yeah, I mean strike is most accurate way to uh, I mean buy Bitcoin for strategy shareholders. And I mean, what was your second question? Sorry.
Yeah, the second question was like, what happens when the stock price starts moving up? Does the return remain 8% or will it start coming down to 6%, 4%? And how is it attractive? Because they are saying it's attractive to someone who's looking for stable returns, and 4.5%, 5% is a struggle for most investors, and we are giving 8%. But is 8% consistently there?
I mean, hmm. See, basically, if, for example, if an insurance company, say Alliance Bernstein, so they have acquired MicroStrategy Converts. So um, basically, when they acquire, they don't
Digant, there's some disturbance at
they
your end.
acquire in large sum.
There's some disturbance at your end. So maybe you
How
can
is
share
it
the
now?
Twitter link on chat, and I can share the screen, and you can maybe that way probably the bandwidth will be less.
Okay,
So
so are you okay? Okay, no problem. Actually, I have shared with you. I mean, in the announcements channel, Jeff Park one.
got it. If you want me to share, I'll just share that.
So, what's the problem? Like, you can't see my screen?
I can see your screen, but the screen was not super clear, and also your voice
Yeah.
was sort of
Hmm.
not clear. Now it's clear. Now your voice is better.
Okay. So, I had one more thing to share about. I mean, it was a PDF from my CFA curriculum, so I have not shared that in the group chat. I mean, okay, then we will first. What my curriculum basically says is that uh, how we value preferred stock. So maybe I can just share a screenshot in the chat, and then Saurabh, you can then.
Sure, sure. You want to cover this material?
Yeah, I will cover, but first I want to share this.
Okay.
I have shared it in the chat. Can you zoom it a little bit? Yeah. So basically, in our curriculum also, we value non-callable and non-convertible preferred stock. So it's like basically in what is STRK? It's convertible, but it's non-callable. So I mean, you have got this idea V0 equals to D0 by R in the last session where we have discussed how yield won't remain same if STRK price rises. So basically, this formula shows that only. So D0 is dividend, R is the yield, whatever yield which is currently going, or which is market is pricing right now, and according to that, V0 will be the price of the STRK share. So what will happen if, I mean, like currently federal funds rate FFR. So as we have repo rate in India in RBI, so that same thing is in the US FFR. So I think we have FOMC meet. I think today or tomorrow. So in that meeting, basically these things, Jerome Powell talks on FFR. Will they decrease it or increase it or things like that? So when for example, currently there's a scenario where America, like Trump is pushing America desperately into recession, like kind of a thing, and because they have new bonds, like they want to refinance their old debt, and if they refinance at current interest rates, then it will be very costly to America. So Trump wants America to go in a recession for a short term and force Jerome Powell to bring the rates down. So what happens if rates go down from 4.3% to 2%? So the R component will go down, and I mean, the value of STRK will rise. So I have done research with Chat GPT, but I have done pretty extensive work with Chat GPT. But I will share the crisp of it in the chat. Just a minute. Maybe Saurabh, I can try reshare my screen, and if how is my
Sure.
voice right? Is it
Your voice is
clear
perfect.
or?
Yeah, it's perfect. I can make out.
Yeah.
If it is okay for you to, or maybe you can, if it is not relevant, you can drop it. But if it is okay for you to help us derive what V0 is and why is it V0, why is V0 equal to D0 by R? Like, I did not go through all the
Basically,
content that.
V0 is present value of strike, and D0 is dividend on the liquidation preference value, that is 100. So what happens like currently, take D0 as $8 and R as like R will be the YTM. Like currently we have $85 as the share price. Basically, currently we know everything, but what happens in our curriculum, we have to find one of the things. So currently STRK price is 85. So 8 divided by 85, that will be the R thing, and from that we will get eventually 85 only. So yeah,
What is R?
basically we will take a dividend discount model. It's basically that, like we will bring all the future dividends at present value.
Okay.
Yeah.
Okay.
So I mean, yeah, that's the thing.
So you're saying
I will share my.
you are saying because through this instrument you will get $8 every year. You can
Yeah.
cumulatively figure out the value of $8 this year, then $8 next year, then $8 next year, then $8 till infinity, and you can discount that value by the CRR or by the interest rate 4.63%, right? So it will be an infinite GP with 8 plus with the geometric progression being 1 by 4.63, right? And when you
1 by 4.63 not. Basically, the yield will be 8 divided by current price, like 85. For a case like here is $100 as our liquidation preference value. Like strategy launched at strategy was looking to launch its STRK at $100, but according to the demand and supply, they launched at 80. So what happened? 8 by 80 will become 10%. So 8 by 10%, 8 by 0.1, which will eventually come to $80 share price. So R will not be equal to federal funds rate. R will be equal to federal funds rate plus, there should be a premium whenever you invest in risky bonds. So STRK is riskier than US treasuries. So that's why 10% minus 4.3. So whatever that comes, it will be 5.7% will be a premium for investors who will invest in STRK.
Okay, got it.
Yeah. So I will try and share my screen. Let me know if it's clear and my voice is clear.
And guys, feel free to ask any questions. Like, we don't have to cover all the material. If you have any questions at any stage, just jump in and ask.
Yeah. So I hope you guys are able to see my screen, right?
So I have one question here. So this particular instrument is focused on the investor who are looking for a certain fixed return, correct?
Yeah.
Okay. So now, if somebody is not looking for a kind of FD kind of return, and if he is directly going for like MSTR stocks, okay? So whatever the dilution happens in future, so the earning per share that will be directly correlated with the earning per share of BTC, right?
I mean, you mean Bitcoin per share?
Yes, Bitcoin per share. For example, now they have 1 million share and a certain amount of Bitcoin. Okay. Now, in future, that 1 million share becomes 2 million. So whatever you are holding, that also becomes twice of that.
Yeah.
So the earning per share, the yield, the BTC yield per share, rather.
Yield.
BTC yield per share will be kind of means even if the dilution happens, the existing holders will not get impacted.
Yeah, basically, I understood your question. Basically, the BTC yield is calculated after dilution of shareholders. Like you gave one example where first there will be 1 million shares, and then let's say after 1 year there will be 2 million shares. So whatever BTC yield which strategy is calculating, that will consider the 1 million to 2 million dilution for shareholder, and after that whatever BTC yield which we get, that will be termed as basically that will be termed as BTC yield, and not like without accounting for dilution. So BTC yield includes the 1 million to 2 million dilution.
And exactly, and if you are holding 1,000, your share becomes 2,000. So whatever yield you are getting per share, that is doubled, right? Means
How
that is
it
what
will
is
be
my,
double? No,
because
no,
now you have
it won't be.
no, BTC yield per share
Yeah,
is decided based on the present total share and present total BTC,
yeah,
based on those two figures. Now,
yeah,
whenever
yeah.
the dilution happens, the existing shareholders, their stake
Mm.
also will get proportionally
Diluted.
increased.
It won't get increased like see, I will give you an analogy. Going forward in the future, suppose you hold 100 MSTR shares. So going forward in the future, number of shares will definitely go up. Whatever strategy is doing, they are the shares number of shares will go up, but the Bitcoin per share will go more up. Like for example, if number of shares go up 10%, Bitcoin per share will go up 20%. What this basically means, you own less percentage of strategy, but you own more Bitcoin. Have you understood my point?
Means I am just trying to understand, if that is the case, then the existing shareholder who is holding 100 shares, and
Hmm.
my strategy will keep on diluting, and I will still be holding 100. That 100
Yeah.
will never become 120, 150, or something like,
No, no,
in the
no.
legacy system. How it happens is like a split and bonus and all those things happens, right?
Yeah, that's a different kind of thing. Split and bonus. We will receive splits, but
Okay.
splits doesn't change your percentage holding in company. It's like basically a face value thing. Like if first we have face value of $10 per share, and if they split into 10, so we will now have 100 shares will become 1,000 shares, but our percentage holding in MicroStrategy will still remain same if there is no dilution.
Okay, so this is a very big risk from my point of view.
I mean, I mean, uh, what 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 we as Bitcoiners see in MicroStrategy is basically Bitcoin per share. We don't see our percentage holding in strategy going down. What KPI we look into it is Bitcoin yield. So basically, even if number of shares go from 100 to 200, our Bitcoin per share will go from 0.1 to 0.2. Even if even if shares go from 100 to 200, in traditional case, what will happen? The earnings will go from 0.1 to 0.05. But in our case, because we are accretively diluting, the Bitcoin per share will go up. That is why we are like who is whoever is looking to invest in strategy, they are looking to this yield, this thing. Like we are not concerned about our holding in strategy. We are concerned about Bitcoin yield. We want more Bitcoin going forward into the future. We are not concerned about uh,
Okay, okay,
like holding percentage holding in strategy.
okay. Understood the philosophy.
And by Bitcoin yield, what we mean is if
Yeah,
today, like MicroStrategy had 100 Bitcoins and tomorrow there's been 200 Bitcoins, then the yield is 100%. So
Yield is 100%, but at the same time, the micro strategy would have added a good amount of additional shares, right?
So if MicroStrategy would have added, say, 100 more shares, they had 100 shares, now they have 200 shares, they had 100 Bitcoin, now they have 200 Bitcoin, then the yield per share kind of remained the same.
Exactly.
it
But
will be
the
zero.
thing is, if they are
It will
adding
be zero.
100, if they are adding 100 Bitcoin and adding 10 times of the
Hmm.
shares, So that is a kind of a backdoor loophole, basically.
Yeah, so Michael,
I
say
mean,
it please.
this is not the
Amda, your voice is breaking again.
yeah. How is it right now? Hello.
It's. I
Hello.
mean, you can stop sharing your screen and then speak. Probably it will get better.
Yeah.
Yeah,
So yeah, how is it?
it's good.
Yeah. So basically, Saurabh and Jayant, what it's happening, like we are accumulating more Bitcoin than the shares which are getting diluted. Basically, for example, last year, if we take last year's example, what happened? Like MicroStrategy has accumulated uh, like 2x amount of, basically MicroStrategy has around 1,86,000 bitcoins last year, and beginning into this year they had around 2x their bitcoin holdings, but the yield was 70%. So the 30% is dilution. Maybe these examples helps you to understand what was the doubt previously.
Yeah, makes sense to me. Does anyone has any doubt as to like this printing of shares is not bad thing? Because eventually all of these are aimed to accumulate more bitcoins behind your share. So even if you have less ownership of MicroStrategy, you end up owning more bitcoin per share. Is that clear to everyone?
Yes, so I would like to add one thing here. So this is a clear strategy of MicroStrategy that they will be accretive to the investors, that they will add more Bitcoin per share. If in any operation like issuing more shares, equity shares, or issuing more preference shares, or issuing more debt, if the Bitcoin is not accretive, like you are not gaining more Bitcoin per share, then they will not do that operation. Basically, that is their strategy, and they have clearly defined what is their strategy. If it is accretive, then only they will do these operations. Otherwise, they will not go ahead with it.
I think
Thank you.
why Jayant is getting confused, I think he took STRK the wrong way. I mean, STRK one share holds 1/10 of MSTR. What I think what you thought is that one STRK will hold 10 shares of MSTR. So
No,
have I guessed it?
that was not the confusion. Basically, means the philosophy what they have adopted to operate this thing is like they are banking on the increased addition of Bitcoin. Okay, and which will and increased addition of Bitcoin, as well as the projected appreciation of the Bitcoin. So that will eventually lead to the BTC yield per share to go on forever. So the philosophy is understood.
Maybe a side question from that. Can I?
Yeah.
Yeah, so I think what in my mind I'm thinking is, then what will be the price of BTC? And maybe let's assume it crashes, when MicroStrategy will stop paying dividends. Is there a scenario like that? Sorry for being a pessimist. Yeah.
I mean, micro MSTR doesn't pay a dividend. We have a
Yeah, sorry,
dividend
the
paying
STR. Yeah.
STRK. Yeah, right. So basically, what preferred stock is, preferred stock doesn't have any obligation to pay a dividend. But like I have discussed this thing in last class. Like there's a thing in preferred stock, cumulative and non-cumulative. So I studied, and STRK is cumulative. Basically, there's a clause in their filing which says, if strategy wants to do MSTR ATM, like strategy wants to issue more MSTR shares, capturing the MNAV, then like before doing MSTR ATM, they should clear all the previous accrued dividends of STRK shareholders. So, I mean, STRK doesn't have any obligation, but they are cumulative in nature. So, and even they have one more thing in the filings, like we all know MSTR like strategy is not they have cash flow, but the cash flow is very less compared to compared to their size. So they have added a clause in which they can pay 8% dividend currently through MSTR ATM. Like they will issue a new MSTR shares and they will give it to STRK preferred owners. So cash flow is not a risk to them right now because of this thing. Does that answer your question?
Yeah, got it. And I think there can be scenarios where they may even look at stock buybacks also, right? And there can be so many scenarios there, like doing financial jitsu, as I call it, right? So there,
yeah,
there's so many options.
In the video, I think Fongli mentions like buying back of stock was on the table. So have you watched that, Saurabh? Like till that point, did you guys watch?
They basically the debt money that they had, it could have been used to buy stocks at a lower price or buy Bitcoin. They chose to go and buy Bitcoin. Yeah, we can
So
maybe share the content and talk a bit more about that if if that is okay. The Twitter or the ChatGPT conversation that you had.
Actually, I have done valuation of STRK. So I don't think it will require one more session.
I think we can try that.
We have
maybe we can skim through it and then more details can be done in a separate session.
Okay. So I will start from starting. Here I have interest rates.
Yeah, your voice keeps going away, but we can try for some more time. Yeah, go ahead.
Yeah, how is it right now?
Yeah, it's okay right now.
Yeah. So basically, on this axis, I have marked interest rates. On this axis, I have marked MSTR share price, and on this axis, I have marked STRK's price. So basically, as you can see, as federal funds rate is STRK value goes up just because of the thing which I have mentioned in starting, like V0 equals to D0 by R. So V0 is basically STRK price here. So because R keeps on decreasing, that will tend STRK's price to rise. And this will help Michael Saylor to aggressively use the remaining part of $21 billion ATM, because the STRK shareholders do not like they are not focused much on increasing value of STRK. They are much focused on 8% yield. So what Saylor can do, suppose like currently we are here 4.3% around here. So what happens if like in next 1 year FOM like Jerome Powell decides and drops 2%. So we are at 2.3%. So maybe state goes on to $200. So seller hit can aggressively, and he had kept the price rise in STR. So
Sorry,
they
Digant.
8% yield.
Digant, I don't think you can share a screen and be audible at the same time. So yeah, we can probably I can share something and you can discuss
Okay.
that, or maybe you can explain in general what your approach is, and then we take up the details.
So I mean, I have shared that in the Tradfi Bitcoin channel. If you can take it out, Saurabh. I'm just sharing it on in the chat. Just a second.
Hello.
I have shared it in the chat, Saurabh. Hello.
Yeah, hello. I'm opening that. I'm opening that link.
Yeah.
So yeah, should I increase the size of it?
Yeah. You can just double click on the image. Yeah. So this guy has basically mapped the same thing which I have tried doing in ChatGPT. So as you can see, currently if you are able to see, guys, are you able to see this red dot? Saurabh, if you can see this red dot.
Yeah.
Yeah, that's where the current. That's where we are.
Currently we are there. Yeah. So what happens, like, if interest rates keep decreasing, the STRK price will go on increasing, because STRK price is inversely proportional to the yield thing, and yield is directly proportional to like FFR plus the risk component of investing in STRK. So basically currently FFR is 4.3%. So if we go to 2.3%, like we will have the denominator around like 4 point, like we have currently it around 10%. We will have that around 8%. So that will increase, that will force STRK price to increase. So as we have discussed earlier, like Saurabh has asked a question, like the yield is not fixed. So seller will try to hit an ATM whenever the price goes to 150, 175, 200, when the yield, the FFR goes down to 2.3%. What seller will do? Seller will hit as hard as seller will hit hard STRK ATM and try to bring down the price. Basically, demand and supply kicks in. So more STRK shares will be there in market. That will push STRK's price down. So this thing will happen, and it will be more accretive to MSTR shareholders. So even in the case of see 0 to 1000, you can see this flat line. This is because this is structured in the filings, like the liquidation preference value of STRK is $100 and the conversion ratio is 10:1. So when you hold one STRK, you hold 1/10 of MSTR. So what happens due to this? Any price rise in MSTR share up to $1,000 share price, that doesn't affect to STRK. Basically, STRK behaves like a bond till $1,000 share price. and after that it starts to behave like an equity. So I had one more video which I have shared. So we will most probably continue that video in the next session. So what that basically means, till $1,000 STRK behaves like a bond, and after $1,000 STRK starts behaving like a equity. So basically this thing gives you gives the value to STRK shareholders. So the Jeff Park, can you open the Jeff Park tweets? Jeff Park's tweets, Saurabh.
Let me check. Jeff Park's tweet. Is it the MSTR True North one? Or that's the YouTube
You
video?
have opened it previously.
Okay.
I have shared it in the Tradfi. Yeah, right. This one. Yeah. Can you zoom in?
More zoom? Okay. Here it is. Okay. More zoom?
Yeah, I can see. I'm able to see.
Alright.
Perfect. Okay. So basically the first up to 3 points I think I have covered. So I would like to start from the in essence STRK. After the third point, are you guys able to follow me? In essence, yeah, right. So yeah, in essence, STRK is a great instrument because it's super short on rates, which in turn has the second order effect of reducing the probability of default, introducing positive interaction coefficient that can help the instrument appreciate massively, while also theoretically earning MSTR stocks on the side. So basically what this means, earning MSTR stocks. So STRK shareholders will be paid dividend in MSTR stocks. So this will one more this is one more thing which STRK shareholders Fang Li gave an example at the start only. Basically, if there's a 60-year-old guy and he doesn't want any volatility, STRK is for the guys who is of age 60 years and he doesn't want 60 vol. So they say it like that. So I mean, you can hold these MSTR stocks as a STRK shareholder, but on that day you can also liquidate MSTR stocks if you want to. So the combination creates a reverse covered call. So before understanding, I want to introduce you guys about what is covered call. Covered call is a kind of a thing where you sell upside, where you sell an upside after a certain point and collect a premium today. Like for example, if there's a stock whose price is $100 and you sell a call on it, and you have a share in backing and you sell a call and sell a call of strike price $200. So uh, if the share price doesn't reach $200, you don't have any obligation and you are simply collecting the premium. So you are selling upside in case of covered call. But what is happening in this case, the combination creates reversed covered call dynamic. That is, instead of selling MSTR while taking price risk, you are acquiring MSTR with a little price risk. But is this good for MSTR? He is asking a question. So this is the million dollar question. So, and here is why the convertibility option is more exotic than originally meets the eyes. Imagine STRK rises to $200 a share. So here in STRK's case, if Saurabh, if you can open strategies site directly. Can you go to the debt section? Debt section. Yeah. Can you zoom in a little bit? Yeah. Okay. So, in the case of converts, what we have a fixed conversion price. In the last column, you guys should be able to see the conversion price 183, 672, 149. Yeah. So this is a fixed price. So whenever MSTR share price goes above this price, your convertible bond goes in the money. So in the case of STRK, this is not the case. Like currently, up till $1,000 share price, STRK is fixed due to its structure, how it's structured. Like it has a liquidation preference value of $100, and because of the conversion ratio of 10:1, the conversion the strike price is $1,000. But let's suppose the strike price goes to $200. What happens in this case is like the STRK price is also going to, strike price of STRK also increases to $2,000. So this is basically what different with strike. So in this case, seller doesn't have the need to just come in and issue new. Sorry. He doesn't have the need to just go in and issue a new convertible and do all that kinds of thing. So sorry. So basically, this is the advantage of strike. You can go back to the tweet. So yeah. So, but we were here. That is $1 million question, and here is why the convertibility option is more exotic than originally meets the eyes. Imagine STRK rises to $200 a share due to declining rates, while MSTR rises to $1,200. So basically, here he explains the real strike shift. I'm really sorry. Real strike shift to $2,000. So as a pref investor, you might think you are technically ITM, but in the money to exercise. But economically, you are out of the money since your market value of shares are worth $200 instead of 1/10 of MSTR 120. So what he is trying to explain. Let's say you bought 10 shares of STRK for $100 share price. So you have total investment of $1,000, right? So because of declining interest rate environment, what happened? STRK price rose and it rise till a point to $200. And in this case, MSTR price also rise till a point of $1,200. But like you are kind of in the money in MSTR, but you will receive more money if you sell your share directly in the market. Like because your STRK shares are currently $200, so 200 into 10, you have purchased 10 STRK shares. So you will receive $2,000. $2,000. You will receive $2,000, but you convert your share. You will receive $1,200 worth of share of MSTR. So he trying to explain it to you that thing. So this is the Faustian bargain made, and why it's impossible for the issuer to have been given call rights. So whenever any issuer gives away the calling feature, basically the dividend which strategy has to pay, that's a liability to STRK guys, STRK holders. So I mean, in case of STRK, there's a no the MS strategy doesn't hold any callability feature. So this is why they have kept the strike moving. Like in this case, the strike will move from $1,000 to $2,000. So this is the trade-off which they have, which invest as an investor which we take, and as a company which they take. So they are taking away the call rights as a issuer, and as an investor we have the uh, we have the share price increase, or we have like we will receive dividends unless and until we as an investor in it convert to an STR. Like strategy, seller can't call away your the way he can call away the converts. Basically, whatever in the money converts which we have right now, maybe you can go back to the strategies. Yeah.
Sudhan, I think your voice
So
is still
basically,
breaking at times. But yeah, we can cover this and maybe we can take it up, like some of it in the next session too. Yeah.
yeah. So last point, what I was explaining, right? Strategy has do not have any right to call your STRK shares, but how this differs with converts is like conversion price of convert 2028, which you can see as 183.19. So basically, this is in the money. So seller can call this anytime right now. Seller can call this $149 convert. Seller can call this $232 convert. Seller can call this $204 convert. But in the case of strike, this seller doesn't have this option to convert your strike shares. So if you are a 60-year-old guy and do not want 60 wall asset, you are not being called. Your shares will not get called in the future. This is the which 60-year-old guy. So this is the thing which Jeff is trying to make a point here in his tweet. And as a as an investor, like have uh, you have this point, you have trade off with you. But what happens, like convertible bonds coupon is obligated, but STRK's dividend doesn't hold the obligation. What can happen? Like one quarter you might receive $2 dividend, but in the next quarter you might the dividend is cumulative. The preferred stock is cumulative in nature. So whenever seller will try and hit an ATM, they will give you the accredited whatever dividends are accredited to give you. So that's what the part trying to you can go back to the tweet. Hello.
Yeah, Digant. The audio sounds like not so good. So maybe we can open the floor for questions and continue the rest of it in the next session from a better network.